Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us, and yesterday the US dollar index showed good recovery. And as expected, our level of 100.80 to 101 acted as a major resistance, and still we can see that dollar index is trying its best to break the resistance and move higher. But we cannot deny the fact that dollar index has failed right now, and as a result of which the dollar index is still inside the range only. The range of 99.50 on the downside, and we have 100.80 to 101.100 on the upside. This is the range of dollar index right now, and in case the dollar index does not show big red candles, then yes, there is a good possibility that today, especially on Friday, dollar index will break the resistance and move higher. Usually we get to see a lot of news during Friday, but if you look at the economic calendar, then today we don't have any news. So technicals will be dominating the market today. So if the dollar index DXY starts falling, then obviously you'll get to see good amount of recovery, good amount of upside on the chart of Euro USD, GBP USD, Gold USD and others. And on the other hand, if dollar index DXY breaks the resistance and starts moving higher, then obviously you will see pressure on Euro USD, Gold USD and others. So plan your trades accordingly. If you're thinking about the next resistance on the chart of dollar index, then technically we don't have any resistance right now. If we draw Fibonacci here, you can see here the Fibonacci 23.6% was around 100.50, 100.80, 101 101 was the previous resistance support working as resistance, and the next good resistance is around 101.50, which is the Fibo 50% retracement level. So you can consider 101.50 to be the next resistance on DXY if the upside continues. Now let's look at the chart of gold. So yesterday when there was a drop on the chart of gold, we saw market bouncing from our level of 1965-66 level. If you have watched my previous videos, then hopefully you made good money, because we do well in gold, isn't it? Okay, and yesterday also we saw a nice bounce from our level. I told you guys yesterday that do not expect the market to bounce from 1969, day before yesterday's level, 1969, and we were hoping to for a bounce around 1965 level, and we got a bounce yesterday. So similarly today you don't expect much from the 1965 level. Today our level, main level, will be 1960 to 1963. This is our support for the day, 1960 to 63, and if market takes support and bounces, we can expect a good upside of around at least 50 to 60 pips. So during the day, if the volatility of the market is low, because you can see right now that market is not very volatile, and as we all know that usually market does not show much volatility during the Asian session and European session. So if market remains like this, then you can expect the market to take support around 1965 to 1966. But in case market shows volatility like yesterday, then this will not work, and your focus should be on 1960 to 1963. I'm doing this analysis on 1 hour time frame. You simply switch to 15 minutes time frame just to see whether market is taking support or not. On 15 minutes time frame, if you see that market is showing price rejection from below, market is forming a hammer pattern, market is taking support, you can go for a buy around 1960, 1961, 62. But my dear friends, do not forget that no level is permanent in the market, so confirmation is extremely important. If market takes support, then only go for a buy. If you see that market is standing at support with a big red candle, use your common sense. Market is not going to take support. And in case the support of 1965 doesn't work out, then your next support will be around 1956-57, the 200 moving average, and then 1945. Okay, this is 1956-57, and then we have 1945, 1956-57 because of the 200 moving average, and 1945 because of FIBO 38.2% retracement level, as well as strong price rejection around this area. 1945 is a very good level on the chart right now, but far away. So as a result, keep your eyes on 65. Sorry, keep your eyes on 60 to 63 only. Okay, and if you're wondering about resistance right now, yes, market is stuck inside a range. You can see that this is the range of gold right now, where we have 1984 previous high, and then yesterday's high of 1987. This is the resistance right now. If really gold wants to continue the upside, then it will have to break this level. Means gold will have to break this level with volume, with a big green candle. Yesterday when I was recording the video, gold was standing somewhere around here. I told you guys that wait for 1 or 2 hours just to see whether gold trades comfortably or not. And right after my recording, I saw that gold is moving down. So this is what we don't want today. So today, if gold goes up, observe the market around 1984-85 level. If you see that gold is going up with big green candles on 1 hour time frame, then you get the confirmation that okay, today there is volume and there's a high chance that market will break the resistance. But if you see that gold is standing at resistance, the size of the candle, the color of the candle doesn't matter. If you see that small candles are forming, then you'll get the confirmation that okay, today also there is not much volume. In that case, there's a high chance that gold will fail again and gold will reverse and you can go for a sell. So volume of the market will decide whether market will break the resistance or not. As a trader, there are certain few things you need to understand, because see, a level can become a resistance, a level can also become a support. Means a resistance can become a support. Okay, so market is very subjective matter. Sometimes it is very confusing for new traders, beginners, I can understand, but sadly there is no other way. So observation is very, very important. So if market reverses due to lack of volume, we can go for a sell. And on the other hand, if market approaches the resistance with volume, with big green candles, you'll get the confirmation that yes, volume is present today and you can go for a buy above 1987, around 1988. Okay. Before this big resistance, we also have few minor resistances for scalpers for 15 to 20 pips around 1976 and 1979. You can see here I have used Fibonacci here, and here market is standing at FIBO 38.2% right now. So means Fibonacci is working. So during the day, if the volatility of the market remains like this, listen to me carefully, if the volatility of the market remains like this, then you can expect 1976 to work as resistance. Simply go to 50 minutes time frame. If you see the market is showing price rejection from below, immediately go for a sell, expect 15 to 20 pips and exit. Similarly, 1979 is also a quick selling opportunity for scalpers. If you sell at 1979, you can expect a profit of 1977. Okay, but if you're a beginner, new trader, do not have much capital, then obviously you should avoid scalping altogether and only wait for the major levels. Okay, so scalping, these two levels are a little bit risky, so beginners please avoid, because first you need to observe the volatility of the market and only take the decision. So as a result, it's better to trade on major levels only. Again, I'll repeat, the goal is still inside the range. The resistance is still very much working today, and market is standing at 1972. As a result, during the day, if market hits the resistance with less volume, high chance that market will not be able to break it. If market reverses, we can go for a sell. But in case market surprises us with volume and market breaks 1987 level with big volume, means then we can go for a buy above 1987 level, around 1988. On the other hand, We don't have any strong support right now, like the previous times. Last time we discussed about layers of support around 69, 65. Today we don't have that. We only have a good support around 1960 to 1963. If market takes support around 60, 63 level, we can go for a buy. In case due to extreme selling pressure, 1960 to 63 doesn't work, your next focus should be on, next support will be around 1956-57 level because of the 200 moving average, or 1945. 45 is far away, but we don't have any strong support right now. Market is looking like sideways. You can, if I zoom out, you can see that it looks like a sideways market, and in sideways market, buy at support and sell at resistance is the best trading strategy that you can follow. Okay, so today is Friday. Be careful, though we don't have any news, but yes, technicals will be dominating and there may be some crazy volatility during the evening time. Okay, so that's all from my side, my dear friends. Bye bye, take care. See ya tomorrow with the analysis for the coming week. And as I always say, please follow proper risk management. This is my analysis, I can be wrong as well, so do not gamble with your hard-earned money. Bye bye, take care.